Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. Today is March 8th, 2024. Most notably, the U.S. unemployment rate for February was released today. It was forecasted at being 3.7%, the same as the last report, but the actual number came out as 3.9%. This is fairly significant in terms of looking at it from a zoomed out perspective, and I'm just going to pull up a chart to show you what I mean. This is Fred, the best place if you want to dive into charts and look at raw economic data. The St. Louis Fed.org is the place to go. This is a chart here called the unemployment rate. And this chart right now, I have it set, let's see, we can go all the way back to 1948. And you can see that unemployment spikes during recessions. That's pretty much the pattern here. The recessions are the gray bars you kind of see in the background, and the unemployment rate is this blue line here, and it goes as low as in 1953 2.5%, and as high as in the COVID 14.8%. Before that, the highest was in 2010 at almost 10%, and also 1983 just over 10%. So during a recession, unemployment goes up, and it doesn't seem to go up very slowly. It kind of spikes up. When it goes up, it goes up, 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 pretty fast, pretty violently. And so this is a very important thing to be keeping track of as far as what might be happening in the future. If we start seeing higher and higher and higher in unemployment rates, that is a telltale sign that we are likely in a recession. And in recessions, people tend to not have work, they tend to spend less money, and it allows them to not be able to invest as much in stocks, which can make stock prices go down, and also the earnings of companies will go down because people don't want to spend as much money. That's what recessions do. They clear out bad debt. They get rid of companies that are, basically mooching, and it clears out the bad debt, and we have our business cycle. And so the thing to look out for in this chart, I think that is important, is to see the beginning of a spike in unemployment. Now, when I zoom in all the way, like super close to looking at from July 22 up until this recent report of February 2024, you can see that we had in 2022 still kind of trending lower, and we hit a bottom, and now all of a sudden higher, and then a higher low, and a higher high, a higher low, and another higher high. Now, does this mean that unemployment is suddenly going to spike like crazy right now? It doesn't necessarily have to. I think it's likely that we are headed into a recession, and this is one of these things that I pay very close attention to as a leading indicator. And, based on the fact that we just went through an extreme tightening cycle, the Fed is now talking about loosening monetary policy, about cutting rates. They see this, they see a whole lot of other data. I think they're seeing a slowdown. Otherwise, why would they start even talking about cutting? And so everything is adding up right now to me to show that we are getting closer and closer to a what I think is a very probable spike in unemployment and a recession, or maybe even something worse. I mentioned in a recent video, not one of my crystal ball videos, but one of my other videos, how stock valuations have, in a way, in a large way, have been in a major bubble since 1995, and we've never, since 1995, we haven't gone through a proper cycle of clearing out all the real bad debt. And it could be a painful process, but a lot of painful processes help growth. They help us learn, and on the other side, things are cleaner, better, easier, and happier. And so it's nothing to fear too much, but crystal ball wise, I see something coming. My crystal ball can't say when it's going to happen, but I'm being, as an investor, I'm being extremely cautious right now. I love treasury bonds, I love cash, I like exposure to things that are away from what I think are the worst bubbles right now, like Bitcoin, semiconductors, and artificial intelligence, these kinds of things, Magnificent Seven stocks. If it does end up turning into a depression, I hope they call it the Magnificent Depression. That would be poetic. Anyways, that's all I have for you for today's show. I hope you enjoyed. Thank you very much for watching. Robschild.